Good morning, everybody, and this is your Dow Jones setups for today. Just want to start off on the weekly here. So if you look left, there's no real weekly support anywhere. I've left the zones in that we had in early in the week because we did find support last week there. Now we're dropping below the low of last week at the moment. We do have a separation here of the oscillators, and we are crossing over to the downside, and the channel has broken. So here's your channel here. So you can see strong move up into a spike into a channel, and now we've broken the channel. So if you look at that as a flag, your target, your logical target zone should be somewhere down here at 37,824 and 37,177. So that's just the beginning of the channel. So that's typically how you would look at this. I'm a little bit cautious. So it is earnings season kicking off, and the banks are kicking off first, and this is typically what happens is the Dow Jones is the first one to have the companies that make it up release their earnings. So looking at the 8-hour, clear break of resistance, or clear resistance area here at 39,064, and that was the level we spoke about earlier in the week. And then we had this bottom area here at 38,854. So we were looking for a break of that. We did get the break, but we didn't get a retest. And then we got another rejection higher yesterday, which then got going. So, just following my own rules, there was no entry there, and I'll show you on the lower time frames. So sometimes it's just wise just to leave it alone, because what happens is you tend to get into the habit of must trade, fear of missing out, and you tend to lose. So when we get sideways price action, when there's no clear direction, I normally just walk away from the charts, which I'm actually quite glad I did yesterday, because it could have really got ugly. So looking at the 3-hour, you can see that was the level. Then we had this strong breakdown, strong move up. So you look at that basically testing the lows here, not really getting an entry anywhere, because you wouldn't be wanting to take 39,064. It is the top of a range, but I don't like doing that. I prefer taking the break and the retest of it, because it's just a lot more profitable for me anyway, because it tends to play out more often than not. Whereas trying to short top of a range, often you sort of short it and then the breakthrough happens. And the reason for that is everybody's trying to short the top of the range. So it just takes one or two institutions to try and drive price higher, and they succeed in triggering stops, which just gives them the move to the upside that they're looking for. So not my style, not what I'm looking for. And what I'd be looking for at the moment is a retest of structure, because we should be looking for a short, and there's a pin bar we need to pay attention to. I'll give you the levels shortly. We do have a little bit of divergence here from last week's low to where we are now. You can see oscillators low, higher low, low, prices low, and lower low. So there definitely is divergence there on the 3-hour. And when you look at this on the 1-hour chart, you can see this was the data, and then you had a bit of a very similar to the setup on the DAX, but in the opposite direction. So strong move down into a channel, and it does look like that channel is breaking. Now, as I said, it is earnings season. We do kick off with some of the banks tomorrow, and I suspect what we're going to see on the indexes is nothing until the bulk of the earning, or the bigger earnings, start coming through next week. So from next week Tuesday, so probably going to see this type of range form that we've had over the last basically 3 days. So I'm very reluctant to be jumping in, especially on this one, on the Dow Jones, just because we have so many earnings coming through, and we had a negative CPI component. The Fed minutes didn't tell us anything, and then you've now got earnings. So what are the traders looking for? They're looking for some information to indicate that they can start buying stocks, or continue buying stocks, should I say. And where you're going to get that is basically out of the earnings. So I'm definitely not one to try and second guess this at the moment. This is a strong move down. Don't like what happened here. I would much prefer a move up higher, reject a level, and then a nice steady move down. But when you're doing this big up, big down, big up, big down, big up, big down, you're forming a lot of resistance levels, and then you break them after hours, which is often what happens. They tend to burn you. So anyway, I am a very cautious individual on S&P, on the S&P and the Dow Jones, to be honest, and I don't trust them right now. So I will be sitting quietly and waiting for better days. Just look at, if you take even this from the swing low. From the swing low to where we are now, you've got higher highs, but look at the oscillators, lower lows. Look where the daily oscillators are grouped. This to me is really looking like a flag. Obviously, we'd need to clear 39,050 before that flag comes into play. But if you just look left, there's so much potential support here, and it just smells like a trap. Sucker you in for a ride short, so you're assuming that you have a double top here which has got follow through, and you're breaking through structure, start loading up your shorts, and before you know it, you've got a whole lot of institutions jumping in long and taking you out. So I'm kind of sitting on the sides. I'll wait for the earnings to kick off next week Tuesday, and then we'll start looking at that. So for me, Dow Jones is a no-go until next week. Hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.